How's it going, friends and family? My name is Amos, and between you and me, it's getting tougher and a challenge to find an undervalued, high-quality company in this stock market. Seems like everything is overpriced, right? But I was playing around with my stock screener the other day, and I think I found one. So, in this video, let's go ahead and investigate to see if Lululemon is a value trap or easy money, as they say. So as you can see on your screen right now, in just this year alone, back in like January of 2025, Lululemon used to be $414 a share. And since then, they've just been in a downward spiral. My goodness gracious, negative 57%. Their current trading multiple is 11.9. That's pretty crazy. And if we zoom back 5 years, this is an apparel retail company, by the way. Back in December of 2023, used to be $511. They're $175 and some change at the time of making this video. So maybe it's just their Cinderella growth story seems to be slowing down. The show is over. I think we're all realizing, like, dude, this is just a yoga pants company. And the fact that the consumer demand's softening, or I guess the other side of that coin is people are just fed up with the idea of paying $150 for a pair of yoga leggings. Are you kidding me? But I'll tell you what, before we dismiss Lululemon, you gotta check this out. So Lululemon's total return for the past 1 year, negative 33%. But if we zoom out 10 years, friends and family, 242%. You would have 3x your money with Lululemon in the span of 10 years. Pretty good. Not the greatest, but I would argue that's pretty good. And if we zoom out to their IPO, I think it was somewhere around like 2007, 20 years, then the total return is 1,030%. But I'm about to blow your mind. Because if we zoom back to prior to their sell-off, January 2024, then the total return would have been 3,060%. Or actually 3,190%, but that's December. So if we just go back into, so 3,015%. So friends and family, they lost about 2,000% of their total return in a matter of a year and a half. So as you can see, by their DNA and timeline in history, Lululemon is most definitely a compounder. I just want to know, will they get back up to those levels again? $400, $500, $600 a share. But before I get ahead of myself, I think we should back it up a bit and answer the question, what exactly is Lululemon and how do they make money? All right, so check this out. Lululemon was founded in 1988 in Vancouver, Canada as a niche clothing brand for yoga studios. And at that time, it was a way of life. Because even from the very beginning, Lululemon was never cheap. It was always freaking expensive. And everybody in Vancouver knew the name of the game. Like if you wear Lululemon, then it told the people around you what you were all about. Spirituality, yoga, fitness, and that your personality was summed up by the leggings that you wore. That made your butt look a little flattering. And fast forward to today, it's still a fan favorite among the yoga community, runners, golfers, and tennis folks. And I guess we could also throw in pickleball. I feel like that's all the rage these days. So Lululemon, as a general statement, they're pretty popular for their fanny packs, their leggings, and their ABC pants for the men, and workout clothes. So Lululemon makes money by manufacturing these high quality fabric apparel and then selling it to the customers like you and I. And on a business operation level, they generate about $1,600 in sales per square foot of their physical stores. That's the highest of any retailer that does physical locations. They print cash, in other words, okay? Second place in the retailer category is Apple. That's pretty outrageous. And I wanted to publicly praise and say thank you to Sridhar and Marco for contributing towards gifts on the Amazon baby registry. I genuinely thank you guys. And I just thought about it today. I think it's going to be absolutely hilarious where even before my daughter is born, she has uncles all around the world and aunties that are supporting her and love her. So I think that's pretty special. I appreciate it, you guys. I love you so much. Thank you. And now let's go ahead and talk about the recent developments surrounding Lululemon. So they just posted their earnings not too long ago. And the earnings, if you don't know, it's a financial snapshot of how they performed in the past 90 days. So in their fiscal year, breaking it down to a quarter, how did things go? And it was not pretty because they cut their revenue guidance for the year. And the biggest culprit is that their US sales, it's struggling. It's just dropping across the board here in the United States. But on the other side of the world, in China, the revenue growth was 25% year over year. And that's about the extent of the highlights of their earnings. Everything else, it was straight garbage. Their new product launches, it fell flat with the target audience, like their really expensive hoodies and sweatshirts. The folks are just not buying it. Especially when you're trying to sell a hoodie for like $150, $180. All I'm trying to say is when you're trying to sell a sweatshirt that's almost $200, it better make me a few inches taller and bring back my hairline. That's outrageous. However, more importantly, what caused the immediate sell-off after they posted their earnings is the tariff situation. It's eating them alive. In fact, right now they're forecasting and expecting a $240 million hit on their profits because of the tariff situation. Dude, that's a lot. That's $250 million gone. And not only that, because the US consumer, they're pulling back their spending, as such, they're having inventory issues. To the point where Lululemon, they're now offering discounts and sales left and right in order to clear up the shelves, in order to reduce their overhead costs and not storing so much inventory in their warehouses, if that makes sense. And to be honest with you, I think Lululemon shot themselves in the foot. Because back in 2022, at the middle of the pandemic, they actually announced a very bold campaign of like, hey, I know right now it's 2022, but in 5 years from now, we're going to double our revenue, and it's going to be $12.5 billion. But I feel bad for punching them while they're down because nobody knew that in 2025, we're going to be dealing with this tariff situation. And were they good on their promise of doubling their revenue? Well, we'll talk about the numbers towards the second half of the video, because right now, I want to calculate the inherent worth of Lululemon. Like how much should their stock price be predicated upon their numbers and financials? Not based on narrative, stories, or speculation, but based on their numbers. The first valuation model is going to be based on their free cash flow. I'm assuming that their free cash flow is going to be modest and it's going to grow at a rate of 4% year over year going forward. If that is the case, then Lululemon as of right now should be valued at $178.66, which means they're right around the ballpark of how much they should be trading for. And why did I say 4%? Because the growth analysis and their forecast that the leadership team of Lululemon is projecting is 4 to 6%. So I went with the lower end of their estimations. $178, and right now, Lululemon's $175. And while we're on the topic of their free cash flow, for what it's worth, for the entirety of their financial history as a publicly traded company, Lululemon's been profitable. And they've been free cash flow positive since 2007. However, to see such a steep drop-off year over year of negative 26%, yeah, guys, that tariff situation, it's biting them right in the left booty hole. The middle booty hole. And by the way, I just took a shower and that's why my hair is wet. It's not because I put gel on my hair. The next valuation model is going to be based on their earnings per share, their bottom line, and the growth trajectory of their net income. But before we get to that, one thing that I want to call out is when you look at Lululemon's historical PE ratio for the past 15 years, on average, 36.8. And if we just zoom in and consider the past 10 years, then 36.7. And if we just think about the past 5 years, 34.7. So somewhere around like a 34 to a 37 is their historical PE ratio. Friends and family, I just want to show you once again, their current trading multiple is 11.9. Wall Street just does not see any growth in Lululemon. They're disgusted by them. And I actually tuned in to their most recent earnings call, and straight from the mouth of the leadership team, their guidance for this fiscal year, it's 2026 for them, is going to be $12.77 to about $12.97 for their EPS. And they blame the tariff situation and importing their goods from China and the cost to do business right now. They're struggling. They're hurting. For you and me, grounded in reality, right now it's 2025. That's what I have on the spreadsheet. But for Lululemon, it's going to be fiscal year 2026. Just bear with me. So if they finish out the year by posting an earnings per share of $12.77 and they continue to trade at a PE ratio of about a 12, then friends and family, I think Lululemon has some more red days ahead of them because they should finish out the year at $153. They're currently $175. They should lose $20 or so. If this is the case, if Wall Street continues to value them at a 12 PE. However, for whatever reason, if Lululemon does go back up to their historical trading multiple of like a 36, then they could finish out the year at 459. Do I see that happening? Absolutely not. I hate to say this, but I think 153 is a higher probability for Lululemon for what do we got? 2.5 more months to go? Then the other side of the argument of them hitting 459. I don't see that happening, guys. I really don't. And if we fast forward and we play this game and the growth rate of their EPS, 7%, 9%, and then once the transition of this current administration happens and the tariff situation becomes a little more friendly around the world, I'm assuming that their net income will jump back up to a double-digit rate, 10%. So in 2028, if their bottom line per share is $16.38, and the market continues to value Lululemon at a PE ratio of a 12, then they should be around 196. Now, I don't know how to say it. It doesn't sound pretty or delicious, but going from 175 to 196 in a span of like 2.5 to 3 years, that's not a lot of upside. But once again, if Lululemon happens to change the narrative surrounding their company, they raise their guidance, and everybody, including you and I and your wife's boyfriend, we all wear Lululemon, and their trading multiple goes back up to a 36, Lululemon, 589. Now, 3 years down the road, I'll be honest with you, I can't tell what's going to happen, let alone what's going to happen to my hairline next month, next quarter. So for me to sit here in front of you and lie to your face that I'm saying, oh, Lululemon's going to be $600, that's disingenuous. I do not know what's going to happen. But based on their numbers and financials, I think Lululemon right now, they're kind of trading for a fair value, especially because the growth story, it does seem to be coming to an end. I mean, the US consumer, their main demographic and core customer base, they're not spending as much anymore, and it's declining. Yes, they do still have the Chinese customers. You better stop it right now. I am not Chinese. That growth story could keep going. But in the US, unless things turn around, I'm going to be honest with you. When it comes to Lululemon, it's tough. Because if we're talking about like Salesforce or Adobe, easy for me to put them into the bullish certified compounder category based on their numbers and financials. What makes this difficult is that Lululemon's financials, we're going to dive deep into it here in a second. It looks just as good as these software companies, as good as United Health, as good as Oshkosh Corporation. But the reason why I hesitate when it comes to Lululemon to put them into the left side, it's that when you think about Lululemon's biggest competition, in my opinion, based on my research, it's going to be Nike. They're also making that premium athleisure wear. You know, like wearing workout clothes all the time to get groceries, to go to church, etc. And when we think about Nike, they're struggling in their own right. Then again, the difference is, up until recently, Lululemon's been focusing on North America, going gung-ho. They just started their endeavors in Asia, in particular China. And they're scaling pretty fast in international territory. Think about it like this. As of right now, 12.9% of Lululemon's revenue is based in China. And that growth story is pretty spectacular. I know there's a lot of people who see great value, but for me, here's the thing. Nike is super mature. At this point, they've been around for like 50, 60 years, and Nike's been playing the Chinese audience for the longest time. Whereas for Lululemon, I feel like they still have a ton of market share that they can take away from Nike. Because the Chinese folks, based on my research, they think really highly of Lululemon. I mean, wouldn't you want to pay $180 for a pair of yoga pants? Doesn't that make you excited? But I want to pump the brakes because the guy in front of me is brake checking me. But check out the facts surrounding their Chinese growth story. In 2024, Lululemon's revenue grew by 41% in China. And as of recently, year over year, now it's up 25%. So it doesn't take a rocket scientist. If you look at that math, even that growth story is slowing down. And this is where it gets worse. Unfortunately for Lululemon, it's not just Nike that's in the conversation. Lululemon has fierce competition in the workout premium athleisure category from Gap's Athleta, Alo. Dude, I looked into the Alo website, and almost every single one of their apparel looks just like a Lululemon. They're also facing competition from a brand called Vuori. It's based in San Diego. It started up in 2015. And they're also facing competition from Costco's Kirkland brand. You can buy a Lululemon style pants for like $15. By the way, Lululemon did sue them. I think that's really petty. And believe it or not, Target, another company that people are saying is a high quality dividend compounder with cheese on discount that's also on sale right now. They also have their own private label brand called All in Motion. It's modeled right after Lululemon. It looks just like their clothes. So, the point that I'm trying to get at, I'm getting there, okay? Hold your horses. What's the rush, buddy? You're taking a dump. It's not like you can poop any faster. You're stuck in the seat, so enjoy the video. The biggest question that I have when it comes to Lululemon is this. What's the economic moat here, guys? When it comes to other companies, it's clear, it's distinct. I know right off the bat what is their clear competitive advantage, their economic moat that separates them from the pack. So, when I think about it, why the heck would a Karen go back to Lululemon time and time again when there's so many similar offerings from the competition at a fraction of the cost? Seriously, please pause the video and answer that question. I tried my hardest, and this is the best that I can come up with. It's this. For the everyday person, they can get rip-offs at Costco for a fraction of the price, for sure. But the Lululemon brand and logo, it means something. Just like getting your coffee from Starbucks, that way you can show up to school or work with that mug or cup in your hand. Starbucks is also a social status kind of a thing. It's like you're either in or you're out. Likewise with Lululemon. Lululemon means that it's premium, high class, and it gives you that social status. Believe it or not, most people, they do want to impress their neighbors. Me, I really don't give a crap. I don't care if people make fun of me or if they look down on me. Doesn't matter. But for the normal individual, they truly do care about the opinions from others. I think it's a soft economic moat that Lululemon is operating with. But other than that, I can't really think of one. And so when it comes to placing them into a category left or right, Lululemon, friends and family, they're going on the watch list, wait list, because I really don't know if they have an economic moat. And at this point in the video, I wanted to circle back to talking about, did they make good on their promise of doubling their revenue to $12.5 billion by 2026? Let's jump on over to their income statement. When they released that bold campaign, they were generating $6.2 billion. I'm looking at this line item right here, and the growth rate year over year to the next fiscal year was 29%. So they went up to $8 billion. Actually, I think most of us were visual learners. So if we look at it visually, in 2022, $6.2 billion, and in the trailing 12 months, we're $10.9 billion. Friends and family, I think they're losing steam, and I don't think they're going to be able to achieve that $12.5 billion revenue that they promised. That's another reason why they're being sold off. As a matter of fact, the numbers are dropping. 42% year over year, 29% year over year, 18% year over year, 10% year over year, and now their guidance going forward is a 4 to 6% growth. Like that's what they're saying we might be able to pull off. Meaning they could be conservative and under-promising so that they can over-deliver, but I don't think Lululemon's the type of company to give lip service. Because digging into them, they have controversy after controversy throughout their entire company history with not being kosher with what they say to the consumers. They've been canceled multiple times in their past, but somehow they're still relevant with a lot of people. But anyways, if we dig a little deeper and look at their numbers, their earnings per share, this is where I feel conflicted. It's been getting optimized and improved year over year, and in the past 12 months, it's $14.72. As a reminder, they're saying our EPS for this year, fiscal year 2026 for them, but for us, 2025, $12.79, around that ballpark. So it's going to drop by $2 per share. They're losing $2 of profits per share thanks to the tariffs. But even if their EPS drops to $12.79, I still think it's not bad at all. We're acting as if their EPS is dropping down to like $1 per share from 14 bucks. It's not. The reality is it's dropping by $2. And if we jump on over to their cash flow statement to take a look at their free cash flow, I mean, right now it's 1.1 billion and it has been dropping, which is so sad to say because it was going in the right trend and direction, but now it's fallen off that cliff, as you can see right there. But I think, based on my forecast, I'm hoping that they can grow their free cash flow at a very modest rate of 4% year over year. But who knows if they can even deliver on that because they failed to deliver on their revenue promise from 2022. If we take a look at their free cash flow per share, $9.63. Even though their recent trend and their financials are dropping, I would still argue it's pretty darn strong, especially for an apparel retail company. And I know they don't pay a dividend, but check this out. They do, in fact, buy back their shares every single year. In 2016, 140 million shares outstanding. Since then, they've just been buying it back every single year consistently, and now there's 121 million. So they do return value back to the shareholders through buybacks, and their financials look above average. I can't say strong because it has been dropping, but it also begs the question, like if we're going to be honest, is this the beginning of the end? Like the end of their reign of the yoga pants queen? Like, is this where they continue to drop year after year and they earn themselves the status of being a penny stock? I'm going to be honest with you. I'll answer my own hypothetical question based on their own company history. I don't think that's going to happen. It's doubtful, but you know what? Anything is possible in this world, right? Now listen, I hate to be that guy that farts during an Uber ride. Like, can you just hurry up and drop me off? Stop freaking farting. But Lululemon, they honestly remind me of Crocs. Now, I'm going to pull them up. Now, Crocs, they manufacture and they sell footwear and apparel. So they're in a parallel industry to Lululemon, and their forward trading multiple is an 8.11. They also do not pay a dividend. I want to show you their financials. Just like Lululemon, every single year without fail, since 2017, since 2017, it's been growing, right? $4.1 billion. And if we jump on over to the cash flow statement to take a look at their free cash flow situation, $768 million. Prior to that in 2024, it was just shy of $1 billion, $923 million. But just like Lululemon, it dropped off. Who knows? Maybe it's because of the tariffs. I have not looked into the Crocs situation, but it really does remind me of Lululemon. Their financials are pretty strong, and they're also being valued at a very low trading multiple. And unfortunately for Crocs, they're also out of favor with the investors. Now, even though Crocs reminds me of Lululemon, if I had to pick between the two and I had to invest into one, based on my understanding, I would go with Lululemon. And I say that as a guy that owns nothing from Lululemon. I've never even stepped foot inside of a Lululemon. And I actually own multiple pairs of Crocs, and they're high quality, and I love them. But I just feel like when we think about that brand, sex appeal, and that status symbol, Crocs, when we talk about what's the economic moat, Crocs, like what is your freaking economic moat? Like what is it? At least with Lululemon, we can come up with one. It might be half-assed, but at least they have a very weak shield running into battle. Crocs, dude, they're sprinting towards the battlefield with nothing on, just butt naked. They're gonna get speared by the first guy. So Crocs, the financials look good, the metrics look good, just not for me. And after doing more research on Lululemon, I think I've come to the conclusion that right now, it seems to be a sector rotation happening where almost everyone in the apparel retail space is selling off. Case in point, let's talk about Under Armour. I will stand on this hill. I genuinely think Under Armour stuff is higher quality and is better than Nike. Now, Nike has a better marketing team, and so it resonates better with the mass majority. But when you put the two together side by side, I think Under Armour products have higher quality. Anyways, Zoom out 5 years ago, they used to trade for about like $26, roughly 25 bucks, roughly 24.47. And since then, they've also just been dropping off. They're currently at $5 a share. That's a pretty wild spectacle to see. And it's not just Under Armour or Crocs that's facing this sell-off. Another company in the apparel retail space that's just being smashed and crushed is Decker Brands. It's the parent company of Hoka One One, Uggs, and several other footwear brands. If we zoom out 5 years ago, I guess they reached their high at the beginning of this year when they used to be 217 bucks, and since then, their stock price has gone down 52.5%. It's not just Under Armour, it's not just Lululemon, and it's not just Crocs. And then the last example that I want to give you is Nike. And based on Nike, I think Lululemon's going to have better days ahead of them. Because check this out. Zoom out 5 years. Nike used to trade for about 177 back in 2021, 172 August 2021. They're currently 71.93. And if we just zoom in and consider year to date, they were being sold off like there was no tomorrow. And back in April, they were roughly 54 bucks. And then in the middle of the summer, Nike posted their earnings and it wasn't as bad as Wall Street anticipated. So consequently, if you only think about Nike since their earnings report, they're up 20%. So I also think Lululemon, there's hope for them. Like if they give guidance or a forecast or they post numbers that's better than expected, who's to say that Lululemon also won't see a 15 or 20% pop? Now the difficult thing is, when will it be the bottom for Lululemon? Is it at 175? Is it at 170? Or is it going to be at 120? You really don't know, right? Because if you buy it at 150 and they drop down to 120 and they pop back up to 150, you're at break even. So that's the really difficult part. But if you have really thick wrists and you can tell the future and you bought Nike at their absolute low back in April, just the past 6 months, then they're up 29.3%. So even Nike, who's going on a massive sell-off, they are slowly recovering. And their trading multiple, a 36.8. And I'll say this right now, their financials don't look as good as Lululemon's. And that's why I think if Lululemon can pull it off and they revise their guidance for a positive future, then I think they could also rebound. But past performance is not indicative of future gains, meaning the history of their past, that's the past. It doesn't mean the future will look anything like that. So when it comes to Lululemon, I don't think I'm going to buy into them. Instead, I'm just going to monitor them because, believe it or not, I think there's way better deals in the stock market, such as the Trade Desk, United Health, Salesforce, and even Adobe. They can be in that conversation. Lululemon is also on paper undervalued, like the ones that I just mentioned. But when we think about the upside, rebound, and recovery, I feel more confident in those four than I do with Lululemon. Because it really pains me to say, but I don't know if Lululemon's going to drop down to 140, 120, 100. We really don't know. They could also recover like Nike did. It can go either way. I can't tell the future and I don't know what's going to happen. So I'm just going to watch them on the sidelines like the very creep that I am. I'm not going to buy them. But I want to hear from you. Are you invested into Lululemon? What's the economic moat surrounding this company? What's the bullish catalyst that Lululemon has? And if you're not invested into them and you don't like them, let me know as well. I would love to hear your feedback and opinions. Now, with that said, if you made it to the end of the video, I love you guys. You're a real one. Stay safe, good luck in the stock market, and I'll talk to you next time. Peace.